Hello and welcome to Business Today Television. I'm Siddharth Zarabi. On the show today with me is P.R. Jaishankar, the Managing Director of the India Infrastructure Finance Company Limited. IIFCL is the only government-owned financial institution that caters to all infra subsectors and plays a very vital role in India's infrastructure finance space. Welcome to the show, Mr. Jaishankar. And let me start by congratulating you for an extension in your tenure by 2 years. Clearly, it is a reflection of all that has happened at IIFCL under your charge. Let me begin by asking you to take us through some of the most important highlights of the recent performance of the company.
Thank you, Siddharth. IIFCL, as you have mentioned, is the only infrastructure lender which has exposure to all the infrastructure subsectors. The company has been set up in 2006 and has been functioning ever since, mainly catering to the direct finance requirements of infrastructure projects. But over a period of time, the company has actually focused on innovations, financial innovations, and is perhaps now positioned as the leading innovative infrastructure lender in India today, mainly catering to long-term requirements of infrastructure projects with an array of products and across the various stages in the infrastructure project lifecycle. As far as the company is concerned, the journey has been quite one of full of experiences and learnings, and I think the experience and the path of the company has been well in resonance with that of the infrastructure sector in India, because the infrastructure sector also began to take shape only in the early part of this new millennium. And since then, the company has been set up, and we have seen the various vagaries during the course of the journey. There have been a lot of achievements, a lot of firsts, particularly in the infrastructure financing domain. And today, with overall cumulative sanction of about 2.5 lakh crores and cumulative disbursements of over 1.5 lakh crores, the company has been able to sanction around 700 projects with a total aggregate project outlay of 12 lakh crores, setting its position as an achievement as a significant lender to public-private partnership projects in India. And the various facets of this sanctions and disbursements include covering about 25% of India's highways, where IIFCL has been a part as a part of the consortium of lenders. About 21% of India's port capacity, about 25% of India's overall energy capacity, and financing almost all the major airports in India, ports in India, urban infrastructure, and many other new sectors that have emerged. We continue our journey, and today, as we stand in the milestone, we have to our credit the highest ever year-on-year performance, the best all-around profit figures and asset quality figures, and proud to state that we have brought down the net NPA levels to 1.4%, as compared to about 20-25%, which was there about 3 to 4 years ago. We have an overall pipeline of about 60,000 crores right now as committed sanctions, which is very which puts the company at a very strong position as far as its future disbursements are concerned. And same time, the provision coverage ratio has increased to 72% as compared to about 40% about 3 to 4 years ago, which gives stability to the balance sheet. And same time, we have been able to shore up our profits with a trend of almost 100%, 109% this year, with a net profit of about 1,076 crores
Right.
to the company's credit.
Can you give us a breakup of the project pipeline of 60,000 crore that you mentioned? What sectors, what projects?
On an average, the company's the proportionate sanctions include 21% of 25% of roads and transportation, about 23% of India's energy capacities in the green field, about 15-20% of the sanctions cover the airports, and then the rest are in the ports, data centers, renewable energy, and other sectors.
Okay. Since we spoke about highways and they are clearly a significant part of your portfolio, what's your outlook about NHAI and what kind of borrowing capacity it has as the largest developer really in India? The debt level is of course projected to rise for NHAI, but what's your own sense about how that piece is panning out?
NHAI is the state's highway constructor and the regulating agency for construction of highways in India, and with its capacities showed up in the recent years, with a lot of other reformative measures also brought about by the government of India, this is only expected to increase further. Mainly to cater to the connectivities that are needed across the country and across the various regions of the country and across the various nooks and corners of the country. So I think as far as the model of the highway authority is concerned, it has come a long way since it was set up in about a couple of decades ago. While it was mainly catering to construction of highways, construction of new roads. Today, we have, to the credit of NHAI, a number of completed roads. And the completed roads itself have now emerged as a new asset class, which means that there are various investors willing to invest, willing to give debt, and take positions for in the debt side as well as the equity side for adding new investments into the India's highway sector. So that is a very encouraging, and that's a very that's an emerging situation as far as the
Right.
highway sector is concerned, which will only go towards overall expansion of the debt base as well as the investment base for the sector in India.
One of the issues that has been a problem for India's infrastructure sector for decades has been project execution risk. Very clearly, if IIFCL is doing well, it also would imply that as far as project execution is concerned, things must have changed. What's your own assessment about the level of project execution risk, the environmental concerns, and the other factors that end up delaying projects and making them unviable and contributing to non-performing assets?
Yeah, you're very right that construction risk occupies the center place as far as the project viability and project feasibility is concerned. And the construction risk itself, in itself, as per se, uh, uh, also has undergone a lot of transformation, because the way in which uh, the project execution was handled a few years ago, or maybe a decade ago, it's no longer the same. And at the same time, this also is largely dependent on what kind of concession mechanisms and what kind of contract mechanisms are employed for the execution of the roads, or for that matter, if I may extend it to the infrastructure sector itself, because it also depends on different other sectors. Now, private investments are very important for the scaling up of our sector, and therefore, public-private partnerships entail concessions, and those concession terms and the concession covenants, they largely have a lot of bearing on this. Over a period of time, the government has a lot of structural reforms, set in motion, number of measures and reforms, changing a number of clauses, making it much more market-oriented, and making it much more investor savvy, particularly in the last 5 years, I should say, and that has led to a large-scale reduction in the construction risk as such. Therefore, this has been one of the major factors why the non-performing assets of the lenders also has peaked, and it's no longer we see a number of fresh slippages in the accounts. So that is one part, and the other part is as far as the future is concerned. There is still a long way to go, because there are still a number of measures which are welcome and which perhaps will be needed to take the infrastructure sector to the next scale, to the next level. Those reforms probably include some in the product sense, like the project completion risk insurance, or for that matter, traffic, consultants' ratings, where the variations between the actuals and the projected ratings can be amplified to bring more confidence amongst the investors and promoters, and many such reforms, like the tripartite agreement, which needs to be put in place, where lenders also can be a party to the concession agreements. Presently, lenders are not party to the concession agreements, which keeps them out of formal interactions between the concessioning authority and the concessionaire. So I think these are all futuristic measures which can be put in place in order to take the infrastructure sector to the next scale.
Mr. Jaishankar, India has experimented with dedicated infrastructure finance entities in different forms over the past few decades, and there have been varying results of that. But instead of going into history, I want to ask you about the role that you feel public sector banks especially can take in the future, because for many years now, in fact over the past 2 decades, public sector banks took on much of the responsibility, gave a lot of money, and had to take a lot of haircuts as well. What happens in terms of the mix between an entity like IIFCL and the public sector banking space?
First of all, I would put it a little differently, that any entity which is governed well, which has a proper accountability and which has good risk framework and good policies and processes and skill sets in place can do well. And I think indeed IIFCL has vindicated that in the recent 3 years. The commercial banks have been, traditionally the largest lenders to infrastructure projects in India, and I think they will continue to do so, and they should continue to do so because of the mammoth fund requirements that are there for the infrastructure sector. And the only, factor of the commercial banks being largely, short-term lenders, or maybe, because they are more laden with short-term funds, they would their appetite for lending long is very, limited. But notwithstanding that, every institution, be it the commercial bank or the financial institution or NBFC, IFCs, or the IDFs, or now we have the IDFs and new age instruments, which are also lending and which are also augmenting financial assistance to infrastructure projects. All institutions should actually, it would be idle to serve the sector by rendering their financial assistance in tune with their capacity, liability capacities. So I think whatever be the institutional capacities, the complementarity between the institutions is more important, and the long-term financing is all about putting in an architecture which can help to churn the assets between the institutions. If an institution is able to lend up to a certain tenor, that can do so to that tenor, and then pass the asset on to the other set of institutions which can lend, which can carry the baton of assets forward. I think that would help the asset getting a longer term finance, and at the same time the project can, the project viability in terms of the DSCRs and the kind of credit repayment capacities can go up. I think this is only good for the system and good for the development of infrastructure sector as a whole.
I'm reminded of what Union Minister Nitin Gadkari says publicly about the issue of financing, and the moot point that he makes is पैसे की कोई कमी नहीं है, project लाइए उसको implement करना है, and that I think is a very important point for your own institution to grow and to finance more and more projects. Fundraising is obviously very, very significant. What are your plans in this regard so that you can lend more and support much more infrastructure development in India?
IIFCL's liabilities have been mainly focused on multilateral financial institutional assistance and market-oriented funding assistance. So we will continue to do with that, and the success of our ability to lend long depends on how we structure the financial assistance and get new innovative financing done for infrastructure projects, and we'll continue to we have been doing that and we'll continue to do that.
All right. A couple of other points. In terms of the project overruns, both from a cost point of view and an execution point of view, we had a major backlog a few years back. Has the situation improved and changed? What's your own assessment?
Yeah, we feel that the new emergence of new slippages of new NPAs are no longer being witnessed. Therefore, we can see that the stress has peaked, and the stress is definitely coming down. And this is mainly on account of, like I said, the measures and the reforms which have been put in place, which has led to strengthening of the system and making it more market oriented. And on the other hand, the The investor confidence also is returning. I think we are seeing a number of public-private partnership projects also coming in the reckoning. So I think it's a combination of good projects and good reforms.
You said that investor confidence is returning, but is the situation changing as far as return on investment is concerned for these investors?
Well, a return on investments in infrastructure projects has to be viewed from both economic as well as financial point of view. And infrastructure projects are very long-term projects. They are generational in nature. What projects one generation develops, a number of other generations also enjoy them. So I think you have to look at it more from the economic point of view. I suppose from the financial returns point of view, today still the way the projects are structured, it is quite attractive and quite well-meaning for any institutional investors to partake in infrastructure sector, both in the equity side as well as in the debt side. We are seeing a lot of interest in the infrastructure asset portfolio as far as the global investors and private equity funds are concerned, mainly because today we have the new age instruments, the InvITs are there, and InvITs have already, an asset under management of over 2.5 lakh crores. So we are seeing more and more good quality completed projects getting into this domain, and a number of and these are also becoming new asset classes. And the interest of the global investors also are increasing in this area. So I suppose this will only go to expand the overall investment base in the infrastructure domain.
On a lighter note, what you are saying, and if I can try and simplify it for our viewers, is that the house that a parent builds, the fruits of that house are enjoyed by the children. I think that's what Mr. Jaishankar really means about long gestation and therefore long period returns. As we wind down this conversation, I want to take up a point on which you have spoken in the past also, which is some sort of legal regulatory framework for infrastructure in India. What is that thought, and why is it essential for the development of infrastructure in India?
Well, like I said, we have come to a level of growth. We are seeing a number of sectors coming up well in the infrastructure domain. We have a good trend so far in the last 5 years. Like I said, a number of measures of the government, particularly the union budget, also has been very, very supportive. And at the same time, I think the number of measures that needs to be put in place, that also needs to be focused. We have in the past, we have seen the discounts, we have seen a number of enforcement-related issues, which again, continue to dog investors as far as greenfield projects are concerned. And where greenfield projects, are the ones where the construction risk is more dominant. I feel that in order to, revive the animal spirits in the greenfield projects, you need to put in place a very, very sound policy mechanism. I would say it is perhaps high time that we bring in some form of a law, an infrastructure law in India, which can aid all the stakeholders in the infrastructure projects and also in the infrastructure sector itself: the concessionaire, the concessioning authority, the lenders, the contractors, ultimately the users, in terms of ensuring that the quality of the project is maintained. And for this, I think you need a very transparent, uniform, and uniformly applicable law that can be enforceable, and that will bring a lot of confidence amongst the investors and all the other stakeholders, and it will lead to greater buoyancy for the sector.
Absolutely, and for a growing India, where we are seeing rapid and significant development of roads, ports, airports, and a whole lot of other infrastructure, a framework would be essential in ensuring that things happen and happen properly with returns for all stakeholders involved. Mr. Jaishankar, thank you very much for your time with us on this conversation. I enjoyed the vision that you shared for IIFCL, and hopefully our viewers will have also learned about how IIFCL is playing a vital role in India's infrastructure finance space. Thank you very much for your time with us today.
Thank you very much. Been a pleasure.
With that, it's a wrap on this conversation. We'll be back with more. Do stay tuned in. Bye-bye.